Well, joining me now for more on the media sector, because that's what he's been watching, we're joined by James Tayler, the Head of Research at Morphic Asset Management. James, welcome to you. Now, it is one that you've followed closely for many years. It's a sector that, you think there are some pockets of growth, but it's been a very tough sector for investors for quite a while now.
Good afternoon, Helen, and thanks for having me on. Indeed, the media sector in aggregate has gone sideways for quite a few years now. But if you look within the sector, there's been quite a wide dispersion between the winners and losers, and that, as stock pickers, is great for us. The dispersion's come about really because of it's not a homogenous sector. There's many different business models within there, and along with these different business models, there's been significant change with digitization that's come about because of the internet. Yeah.
But James, sorry, the whole sector has really been sort of downgraded, I guess, in recent years. Newspapers, all the traditional old media. Is it mainly because of diffracting audiences leading to declining, eyes on the page or the TV screen, therefore declining ad revenues?
It's exactly that. Advertisers in the past only had a few mediums, advertising-driven business models such as traditional TV, radio and newspapers, and now the advertisers have other ways to get to eyeballs, and they're paying for eyeballs. And also they're paying for accountability as well. In the past, networks would guess about their audience numbers. Now, particularly on digital platforms, an advertiser knows to the nearest consumer the number of eyeballs that he's reaching.
Yeah. Well, as you said, there are very many different business models. In your view, you think there are some areas for growth, but so are the disruptors not winning everywhere?
Certainly not. Content remains king. That's the reason people watch TV, go to watch films, read, consume content on the web. So content makers are well positioned, and I think will continue to be so. The question is whether you can get paid for that content. Now, if you're a Network 10, for instance, clearly there, and I'm not judging the quality of their content, but advertisers have not been willing to pay as much as it costs to produce or buy in that content. Ergo, the business model as it stands made a loss. It's not that indebted, but cannot function going forward as it was.
Yeah.
On the other hand, in areas really the interface between advertising dollars and the consumer, digitization is only just taking effect, and we're particularly enthusiastic about the area of market research.
Okay, tell us more.
Well, in the olden days, it was the case that as human beings we got on with our life, and if we were walking down the street and accosted by somebody with a clipboard who might ask us some questions, we would undertake some market research. We might get a telephone call and answer some questions that way. However, in the modern world, there's very little we as human beings can do without leaving a digital footprint. Our footprints are everywhere.
Yeah.
And we carry around devices with us. Now...
So all that information's being sold, and then other people are doing the sort of the data analytics on it, and are they the companies you're saying you're interested in?
Absolutely, but that data's sold and there's big data out there, but there's also having access to that data. So a recent IPO that we have an interest in Japan called Macromail, sold by the private equity company Bain, they have access to upwards of 80 million consumers. In the way that a brand might ask a marketing company, market research company to put together a panel of consumers, these guys nowadays can put digital cookies, other pieces of software in front of these huge panels, huge numbers, and get a huge amount of response very quickly for global brands as to new product launches, content, and so on and so forth.
Yes.
That's relatively new.
It's just sort of extraordinary, really. So they don't even have to sort of, they can do it all digitally. But why Macromail specifically are you interested in?
Well, because of the growth relative to other media companies and the market as a whole. Their business is predominantly Japanese. The traditional market research market there is growing in line with GDP, 1-2%. but digital market research is growing at 7-8%. And
Really?
it's the same elsewhere in the world. They have acquired businesses outside of Japan and are taking that intellectual property and those techniques into the US, into Europe. Again, working with all the major brands from Disney through to Unilever and so on. And allied with that, they have a lot of expertise in data management. They also have expertise in advising on how companies, brand owners can use social media and digital media. And that's another high growth area. Most companies, most large companies will be able to afford many marketing people that can understand and manage media campaigns on the social platforms. But for the small and medium size enterprises, that's just not possible. So these guys can help any kind of business in the new digital marketing world.
All right, James Tayler from Morphic Asset Management, thanks so much for joining us.
Thank you, Helen.